do 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 do. I'm back. AVE on the Venture Stock Exchange, the Toronto Stock Exchange, and that is a stock called Aveda Transportation and Energy. And this is a pick that came up from the scanners from stageanalysis.net. And honestly, when I go through my tickers and I don't have alerts, or there's I don't seem to have a good stage 2 breakout or stage 4 breakdown in the stocks that I follow, man, go to stageanalysis.net and the screeners that he's a trader is running, and his watch list, man, they're on point. I grabbed those, and they're really good he's really pinpointed how to screen out the noise and have good stage 2s, imminent breakouts. And all you have to do is pop open a few, look at them, see how you like them, put your alerts, and after that, you're ready to go when those alerts get triggered. And right now, AVE. Okay, let's go jump on the monthly. And first thing that comes to mind is it had a nice stage 2 right here. Well, this is on the monthly. There are stage analysis. You could probably do it on the monthly also. But Stan's framework is based on the weekly. And I apply my classic chart trading framework on the monthly chart. If I have a breakout according to my framework on the monthly, then I know I'll have the win in my sales for the weekly when applying Stan Weinstein's. I have harmony, I have increased confidence that I'll have the power of the trend on my side, because you always want to be in harmony with the higher prevailing trend. Right now, set my alerts right there. Try to get a feel of the important resistance, important support. And right now, it's just above this important resistance right here at the 92 cents level. It popped above. It popped above another important level here at the 59 level. So right here, you have a shorter, closer term pattern to the breakout line encompassed in a larger pattern. And these bigger patterns give further away targets, less probable targets, possible targets. And these shorter term patterns give you closer, more probable targets. And right now, let's zoom it up. There you go. Remember the chart, it could skew your perception, your analysis. Make sure you have some black space all around here. So if you look at it this way, oh, this looks like a top. It's only going to go down. And if somebody positions like that, oh, look, it's a bottom. It can only go up. Well, the truth is in between both. So right here, if you have black area, you let your brain digest that candles could be here. If it's down here, then you might have a difficulty with your brain imagining that the price action could go lower. So make sure this is what I call the part of the emotional management. Then you have the money management, never risk more than 1% per trade, simultaneous trades together at the same time, etc. Risk management is your how much risk, your position size versus how much reward, and then after that, how many times that you actually reach those rewards, and to make sure when you do the math, then if you have let's say risk to reward risk 1 to win 2, if you're right 1 time out of 2, you still make money. So 1 time you win 2 rewards. The next time you lose 1 risk and you still made a net +1. So that's the risk management. And then I added emotional management. Emotional management is stuff like this, clues like this. Put the black area all around. Get a chart software that permits to do this. Woo! And zoom in, zoom out. Don't accept what the chart gives you and when it's like this, because it's trying to fit all the candles and then you think this is a stronger base than it is. Or what counts is the price action, and zoom in if you have to get the best look you can at the price action. And to make sure you're as precise as possible when you set those alerts. Sometimes I set those alerts and it'd be like that because I didn't zoom in and bring it as close as possible so you have the most precise picture as possible. And like that, you have the clearest picture of where your breakout line is. Am I actually breaking out, etc. So right here, you seem to have a nice bottom. You have this pattern here that resolved, giving and it reached in that same candle. It reached its target. Here was the bottom pattern. Add on the breakout line, implied measure move, and bam, target reach. But now after that, you have this bigger pattern that's in the works. Maybe here at the end of, remember this is a monthly candle, so maybe at the end of the month, price action is going to go down here. We'll have a few more candles. Don't jump the gun yet. Monthly candle hasn't closed. This could, look at that. This is noise. That means during that month, the price action was up here. This is like a high watermark, was up here. You could have said, I'm breaking out above this pattern. If you would have jumped in anywhere here and you didn't wait for the monthly close, oh, what happened? Then you would have been stuck. These are month, 1 year. You would have been triggered out here, probably emotional landmine, or you would have given up. It's like 1, 2, 3, 6, like over a year, or you would have hit a sell stop loss, etc. So don't get caught. Make sure that this candle closes above the breakout line. See, I'm going to leave that here just to show you that what that looks like on the weekly candle. And this is the measured move added onto breakout line. So if I'd be doing just my classical trading framework, and that would be my target for AVE if we get a close above 92 level. And it's right under previous support turn resistance. And it's a beautiful target, 150. All right, so let's go. So we know this is what we need to have the wind in our sails. Let's go take a look at the weekly, Stan Weinstein. RSI going upwards above halfway point. Again, not the Mansfield, just a regular RSI, but I still use it as a indicator of the strength of the stock. Wow, look at the volume. You need four times the average of the previous 4 to 5 weeks. Oh, there you go. Let's see what we have here. We have a lot more. Something's up. Look at that nice base. Been lasting forever. See, here's the noise right here. See that? If you would have played that, false, it would have been a false breakout. Plus, on the weekly, what's fun now is I have the Ichimoku cloud. And as Isa Trader recommended, and I always do it now on the weekly, don't play a breakout unless you're above the red cloud. And here you could have said, I have a breakout. Okay, let's zoom in. This is worth it. Oh. Here you could have said I have a breakout. You could have cheated yourself into saying that I have 4 times the average volume of the previous 4 weeks. But the ultimate telltale sign is the, let me resume all that, is the Ichimoku cloud. That's resistance, overhead resistance. That's another example. You would have just got whipsawed. Don't get greedy. Don't say, I'm going to go out to the moon. Just wait. Let the chart marinate. Let the market decide what it wants to do. And you see that you would have had to wait over a year. And now look how the cloud has thinned out. The red line, support, all that red area, the resistance, almost gone. And right now, on the weekly, it gapped up. And now if we have a close above that red, this is history right here. Right now, the price action is above the red cloud, above the 30-week moving average. And where's my trend line? Let's put it back at the 98 level. Whoa. Let me put it back. Wait. Why did that disappear? Let's put it back on the... There it is. Okay. And let's go back on the weekly. So if we get to close on the weekly above this important monthly resistance line at 92, then we have the volume, we have the RSI going up. This is a stage 2 breakout. If you're not patient, you could you didn't want to look at the higher prevailing trend, or you could say, okay, I'm jumping in now. Or if the best would just be to wait for the close of next week, and or till Monday, the 30th, wait for that close, wherever the price action may be. Who knows? Maybe it's gonna go back down. Maybe they'll just it's gonna refill the gap. Don't get caught. But this is definitely 2 weeks, 1 week, and away from having confirmation of a nice stage 2 right there. And with that volume, it's very impressive. So that's about it. Don't worry about it for AVE. This is definitely to keep on your radar, and just make sure that you don't jump the gun. Just keep it under your radar right now and just wait. And when you can't wait no more and you have no more reasons not to be in, then it's time to go in. Always try to find an excuse not to go in. And right now, my usual go-to excuse is, I'll wait for the end of the month just to make sure that that monthly candle closes above that breakout line. So that's always my go-to excuse. And trust me, guys, there's always stage 2s out there, always stage 4s, energy stocks, and gold's on the verge of breaking out, and silver, if it hadn't do already. There's a lot. Take your eyes off the ones that are slowing down, that are entering stage 3s. Take your eyes off the ones that are entering stage 1s. Keep your eye out on early stage 2s and early stage 4s, and you'll have an abundance of stocks to look at, and you won't feel the urge of jumping the trigger on less than optimal stocks that are ready to break out. That's another aspect of emotional management. Emotion management is give yourself plans for actions that might happen. And if you have a plan for X actions, then that's your emotional preparedness, and you won't land on emotional landmines. You'll be one step ahead of the game, just like this, just anticipating pullbacks, expecting pullbacks, and then after that, judging if they're healthy pullbacks on low volume. That means the price action is going to go back up. Or if they're pullbacks on high volume, warning sign that it could be a failed breakout you're dealing with. Having those type of responses for those type of pullbacks, then you won't panic. So let's say you would enter the stock here, and after 1 to 3 months, usually there's a pullback. Then you don't panic if it's on low volume. You'll even say, hey, low volume pullback, awesome. When I come back to my breakout line, I'm buying more. Emotional management, add that to your arsenal. It's a big part of it. Risk management, money management, and emotion management. Apply it, and you have the 3 pillars of a successful trading career. All right, guys, AVE, thanks for letting me use you to go through those points, and see ya soon. Ciao.